Hello everyone, this is Paul from the APNacademy, and in today's video we're going to be talking about candlestick patterns that actually work. There are very many types of candlestick patterns that probably you've come across, and every time you try to identify them in your levels of interest or levels of entry, they do not actually hold the trade that you want to take. If you want to take a buy, you look at the candles that you read that this tells you a buy is coming in or sellers are coming to the market, and actually every time you try out, they do not hold. So this is the purpose of this video. We are going to be looking at exact candlestick patterns that you need to be looking out for no matter the type of trader you are, whether you use indicators, no matter the type of indicator you use, whether you use price action, no matter the type of trader or type of trading you do, these are the candles you're supposed to be looking out for in case you would like to take a trade, right? So we're going to first talk about the uses of the candlesticks. Then we'll talk about the types of candlesticks that you should actually be looking out for. And then we're going to look at how we use these candlesticks. Are we together? Now, if you've been following our videos or watching our videos, you know that we usually start with theory to make you understand so that you can understand exactly what we're talking about. Then after understanding, we move to the charts so that we are together when I'm illustrating to you how whatever we're spoken about is done so that no one is lost. Are we together? So let's get into it straight. Let's start with the theory, and we're going to start with the uses. We're going to start with the uses of the candles. Now, most people do not tend to understand actually the uses of candlesticks. They think that candlesticks are just supposed to, when you see an engulfing, you're supposed to do this, what you've been reading in the books. When I see a morning star, you're supposed to be doing what they're telling you in the books and all that. But actually, candlesticks have two major uses that you're supposed to be focusing on. The first one is, remember, the charts are supposed to be communicating to the traders, and then the trader is supposed to be reacting to what the charts are communicating to you. So what on the chart is supposed to be communicating to traders is price. And what language does price use to communicate to you? It uses the different types of charts that are available to you. There are very many types of charts that are available to traders, but there are three major common types of charts that most traders use. The first one, we have the bar chart, which is not very common. Then we have the line chart, and then the most common one is the candlestick chart graph that most traders are using. So these candles communicate to traders that the price is doing this and this in whatever time frame that you're in. Are we following? The candlesticks are supposed to be communicating what price is doing and what it's most likely to do. Those candles with the different types of bodies, because they're different, they form different types of bodies, and in the process of forming different types of bodies, they're communicating to you. If the body is like this, if it is approaching a key area like this, what does it mean? And that's exactly what we're going to be looking at. Then secondly, candlesticks also tell buyers or sellers, in case you're a buyer or seller, they're trying to tell you that your other colleagues, the other traders, the other side, are also doing this. They're doing this, or they're planning to do this, right? So in simple terms, the candlesticks tell you, right, what other traders are doing. They do this through still the size of their bodies. Is it rejecting? Are they losing momentum? Are they impulsive and all that? This is all communication to traders. Are we following, guys? So if you understand this, you're going to know how to use candlesticks properly, right? Now, having looked at the uses of the candlesticks, I would like us to go to the types that we need to look out for whenever we are on the charts, whenever we have marked out our areas of interest, whenever we have marked out our areas of entry. Just look out for these candlesticks and you'll never go wrong. Whether there's a breakout, whether there's a retest and all that. As long as you've marked your levels, just look out for these types of candles that I'm going to illustrate to you. After here, we're just doing theory. After here, we're going to the charts, and then I'm going to show you exactly how these candles play out, right? So let's start with the very first one, which people tend to ignore, or most people don't know. Most of the traders do not know this type of candlestick pattern. Let's start with the first one. Now, the first one is what we call loss of momentum candles, or what most of you call shrinking candles. Why are we calling them loss of momentum? Because I just want you to look at how the candles are moving. This first one is big, followed by a smaller one. This one is smaller than the first one, you can see. And then this one even got smaller. Now, let's assume if I'd marked my resistance and my support like this, right? And price is approaching this level. Now, once price starts approaching the level that you've marked, because these are buy candles, once the price starts to approach this level that you've marked in such a way, it's communicating to you that we buyers are tired, right? I normally give an example of an athlete or what we call runners. When you see an athlete has started reducing speed, either he is tired or he or she is injured. Now, the same communication, the same type of communication is what candlesticks give you. When you start seeing them behaving in this way, they're telling you that we are tired. We no longer have energy to push more further upwards. Are we together? So if you've been ignoring this type of candlesticks, make sure you start using them seriously, because it's one of the ways you can tell that actually my level is going to hold or price is actually going to break through. Look at the momentum with which it's approaching here. If you start seeing it's still having big momentum, most likely it's going to break through this area, because most of us are caught up with false breakouts and all that. One of the candlestick patterns that can help you is this one, your loss of momentum candles, or what you can call shrinking candles. So how do you use them? Watch how they approach this area that you've marked. If it's big, the way it's approaching is big, then it starts reducing in size. You know that I'm supposed to start possibly thinking about my entry rules for sales. When the moment you see them, that means that you're supposed to take a sell. For example, these are buys, right? The same applies for sales. If I mark my level, this is my resistance, this is my support, and the sell candles are approaching and they keep on reducing in size, this is telling me that, hey, sellers are no longer strong in the market. Are we together? The loss of momentum candles. I've just illustrated using the buy ones, but also the sells are just the opposite. Are we together? The sells are also just the opposite. Now, the moment you draw a support and resistance levels or whatever, order block or whatever you want to call them, demand and supply, the moment price is approaching the demand area in a loss of momentum way. What do we mean by loss of momentum? When the candles are reducing in size. This is simply communicating to you that, hey, we sellers are tired. We no longer have enough liquidity to continue pushing the price down. That is simply what this means. Are we following, guys? So it's very, very important. We are going to see how exactly it applies on the charts when we are done with the theory part. Now let's continue. Let's move to the second type of candles. Now the second type of candles are these. Mostly you've looked at these ones. Some of you call them pin bars. Some of you call them hammers and all that. But these candles are actually called rejecting candles, or what most people call long wick candles. There are very many names given to them: pin bars, hammers, whatever, rejecting candles, long wick and all that. But they're all categorized under rejecting candles or long wick candles. Now, when you have a key level that you've marked, right? When you have a key level that you've marked and price approaches that area in a loss of momentum way. Look at these guys. I've organized them in order somehow, because at the end of the day, you're supposed to use them in a combining way. You're not supposed to use a candlestick alone. I'm sure some of you have faced this issue whereby you've marked your area. For example, I have marked my resistance and support. This is my support, this is my resistance. And the price approaches here without loss of momentum, and I see a very long rejecting candle, and I take a sell. This is what most of you are doing. Then the market continues up. I'm sure most of you have faced this. Why? Because you're just using the candlestick alone, right? This is, the market makers tend to take advantage of this, and most traders are falling for this trap. So you have to use them combiningly. One, is there loss of momentum? Then two, is there the rest of the candles that we're going to talk about? And the first one is the rejecting candles. Now, what are the rejecting candles telling us? Just look at this here. So this is the tail, right? This is the tail. It's telling you that buyers, when the price opened from here, it tried to go up and created a high price that it reached in the time frame of this candle. Remember, each candle represents the time frame that you're in. If you're in H1, that candle is representing 1 hour. If you're in H4, that candle is representing 4 hours. If you're in weekly, that candle is representing 1 week. If you're in daily, that candle you're seeing, it represents 1 day. And if in monthly, that each candle represents a month. So let's say this is a daily candle. It means that that day, the highest price that was reached was this one here, right? So now when this high price was reached, sellers were pushed back down. Do you see this? They tried to go to this high price here, this one here, but they were pushed back down and they closed here. Are we together? But also in the process of going down, they tried to make this low, but they've rejected and they closed here. Now, this is the type of communication that we need to understand, right? Alternatively, also here, the market opened here, right? Made a certain high price here, and it closed here. But don't forget that when price opened, it tried to reach down, right? It tried to reach down to make a low price here, and it was rejected. It means that the market tried to go down, or sellers tried to push the price down, but buyers rejected the sellers and the market came and closed up. And actually the market, this is the open, and the market came and closed up here. It means that sellers tried to overpower buyers, but buyers were stronger than them and overpowered them. This is what these candles are trying to communicate to us. Are we together? But let me repeat this. You are not supposed to use the candle alone. You are not supposed to use this candle alone, as we are going to see when we reach the part of combining them. Are we together? Now, the next type of candles that you need to be aware of, or that you need to be looking out for, these are the candles that people call haramis, or what people call inside bars. Now, most traders, actually I would give a percentage of 99% of the traders get this type of candlestick wrong. I just want you guys to look at something here. Now, most people think that if I have a candle, this, let's say, is a sell candle. This is the wick. Remember, this is the high. This wick is telling me this is the high, this is the low the price made. Most people think that if another candle, a buy candle, comes and has a long tail and the body is contained within this, this is an inside bar, or what we call haramis. This is wrong. This is not a harami. A harami or an inside bar, this next candle here, this one here, all its body must be contained in the previous candle, in this previous candle here. If that is not the case, like this one, whereby the low of the day of this candle, the low of this candle here is outside this candle, does not make it a harami. Now, most of you are losing money using this type of candlesticks. So like, I have seen a harami, and you take a trade, and within a few minutes or few hours, your trade is in deep negatives. Why? Because you're using it wrongly. Now, what makes it correct? I just want you guys to look at this candle here, right? Look at this candle. This is the high. This is the open. This is the close, open, close, high. And this is the low. But look at this candle. This is the high. This is the close. This is the open. This is the low. All its body, including the highs and lows, are contained within this previous candle. Look at also this one here. High, close, open, low, right? But look at this next one. All of it is contained. All of it is contained within this previous candle. Are you seeing this? The whole of this candle is contained within this. So this makes it a harami. If it is not like that, that is not a harami. You guys are getting it wrong. Are we together? So this is the other type of candlestick patterns that you need to look out for if it happens in this way. But remember, we have said we need to combine it with something. And the most important candlestick patterns that you need to combine it with the rest of these is this one here. We need to first see a loss of momentum. If I'm moving up, I need to see a loss of momentum. If I'm moving down, I need to see a loss of momentum, that sellers are losing it. If I'm moving up, I need to see that buyers are losing it. Then these other ones come into play. Are we together? Then the other type of candlestick patterns that we need to look out for are what we call engulfings. Now, it can be a bullish engulfing, or it can be a bullish engulfing or a bearish engulfing. And what do I mean by an engulfing? Just like the name itself suggests, that the previous candle is eaten up by the next one, right? Even if it was a bullish engulfing, this one is a bearish engulfing because the sell candle isn't eating up the buy candle. Now, if it was the other way around, whereby the sell candle let's say this is my sell candle, the shaded one, and the next one is a bullish one. It's eating up there. It's eating up the previous one. This makes it a bullish engulfing. Now, just a suggestion here, or what you should put into note, is that don't use these candlesticks alone. For example, if you want to use if you would like to use the engulfings, the haramis and all that correctly, use it after a loss of momentum and after rejecting candles. Then you can, when you see either a harami or bearish engulfing, then you can take it into consideration. But if you only see an engulfing, it can be bullish engulfing or bearish engulfing, and you just use it, in most cases, it's going to be a trap on your side. Are we together? Even if it is in your key area, make sure, one, you have loss of momentum, and then you have price being rejected from that key area, and then you can consider the haramis, and then you can consider the engulfing, especially the engulfings. The engulfings are telling you that we are overpowering these guys, but you cannot overpower them without loss of momentum. This is just now logic. You cannot say that you're overpowering the sellers or the buyers without loss of momentum. Let's assume this is a bearish engulfing. You cannot tell me that the sellers are overpowering buyers without a loss of momentum or without a rejection. So you are supposed to use the engulfings after loss of momentum or a rejection, or what we call a harami. That's why I told you that I have organized them in order, right? So the most powerful thing that you have to put into consideration or action is you need to see loss of momentum. After loss of momentum, if you can see rejecting candles, it can be one massive rejection or multiple rejections. Sometimes we have multiple rejections from that area. Then you can start saying that, okay, if I see a harami, it's okay. And what is a harami telling me? A harami is telling me that sellers were there, but buyers showed us that they are also available. They have ambushed the sellers. That's why it's called an inside bar. They have ambushed, like the momentum of the sellers has been eaten up, and buyers have shown their presence into the market. Are we together? While engulfing shows you that we have taken over these guys, but you cannot take over the guys, either sellers or buyers, when you don't have loss of momentum, when you don't have rejection of the key area. I hope you guys are understanding this. If you have questions or you're lost somewhere, please do not forget to comment below. We always answer your comments so that you can be helped and you get these things properly, right? And also, if it's your first time coming across our videos, do not forget to smash that subscribe button. And if you've been watching our videos and you get value out of them, do not forget to click that thumbs up button, right? So these are the types of candles that we do encourage you to look at, and they will always work out if you use them the way I've explained. Don't forget, we're just in theory, we're going to go to the chart and you see exactly how these things apply, right? Now, let's finalize with how we use them. I've explained how each candle is used, but let's see under what circumstances do we use them. One, you need to first mark your areas of interest. Do not just go to the chart and start looking out for candles and take trades. Don't do that. Some people, they just go to the charts, and when they see an engulfing, bearish or bullish, they take the trade. That is very wrong. One, you have to first do analysis. For example, if I have my W and this is my area of interest that I would like to take a trade from, and the trade moves directly into this area here. One, I need to observe how is the market coming to this key area that I've marked. Because point one is saying that I need to, this is my first point, saying that mark your levels or areas of interest or entry. Remember, we have explained areas of entry and interest in our previous videos. This is just a kind reminder, guys. We're not teaching you guys here strategies. We're not just making videos for the sake. We are making videos that are related to each other, that are supposed to show you how you are to take trades, how you're supposed to trade, to improve your trading accuracies, right? So all the videos are related. So if you miss something in this current video or the video you're watching, make sure you look at the previous videos so that you can get acquainted with what we've been talking about, right? So if you've not watched our previous videos, make sure you watch them so that these videos are related, right? So if you do not know the rules of W's and M's, we have a whole video about M's and W's. If you don't know about head and shoulders, we have a whole video about head and shoulders. And if you do not know how to mark support and resistance or key areas, we also have a whole video on them. Just scroll through our videos and you're able to watch them. Now, if this is my key area, we have said the first point is to mark your levels of interest or entry. So if this is my level of interest or entry, one, we have talked about the candles that show loss of momentum. Big candle keeps on losing size. And then if I see a rejection, that's another sign that's telling me that, hey, there's a possibility I should start looking for my rules to take buys. And then if I can see the next one, which is engulfing or a Harami, then I will need to see also a momentum candle, which I'm going to show you on the chart. And the momentum candle is most likely a long candle sticking out. For example, if we have rejecting this area here, we're rejecting this area multiple times, and we see next thing a long bullish candle. This is what I'm calling a momentum candle. It's telling you that buyers have now come into play, right? So let's go to the second point. The second point is saying wait for the formation of the candles in the marked areas. The formation of the candles, which are we talking about? The ones that we just talked previously about. Which are those? The loss of momentum candles, the rejecting candles, and the engulfings. Those are the candles you're supposed to be looking out for them forming these areas. So these are the ways you're supposed to use candles, but just recall this is theory. Let's now go to our charts and we see how we use them practically, because trading is practical. It's not about words. You need to practice. After watching these videos, make sure you go and practice these things. No matter what type of a trader you are, whether you're trading cryptos or you're trading stock indices, or you're trading synthetic indices, these are the same things that happen as long as something involves price. As long as price is there, that's what we call price action. Price is acting at your levels, the different levels of market, right? So let's just get to our charts and we see how we apply all these types of candlestick patterns that we've spoken about. Okay, so I'm on my charts here. I'm using TradingView today. Remember, in different videos, I use different analysis platforms so that you can get used to the different types of platforms. Do not only get used to TradingView. Some people are not comfortable with TradingView. Some people are comfortable with MetaTrader. You can use any of your choice. So that's why I keep switching between MetaTrader, TradingView, and all that. So now I want us to put these candlestick patterns that we've spoken about. Recall we said we have to use them in a combined way. We have the shrinking candles, we have the rejecting candles, we have the haramis, and then we have the engulfings. These are the most important candlestick patterns that you need to have in your mind, but you don't use them alone like how you've been doing. If you can put this into consideration, you're going to see how your trading accuracy is going to really go way high, right? So now I've already marked these levels because in the previous videos where they looked at how we mark levels of demand and supply. So I didn't want to go through all that. Now, let's start with this first turning point where the market turned from here to go all the way up, and then again came back to turn from here to go all the way up, and then came back here and gave us a false breakout. I'm going to show you a live chart example, not just one part and all that. I want to show you how exactly it applies or it's applicable in practical sense. Now, I want you guys to see how the market approached this level here. The first candle here was big. The next candle was smaller. And then now when the candle gave out this here, most people think this is an inside bar. This is not an inside bar. Who can guess why it's not an inside bar? I hope now you guys can know the reason as to why. We say the inside bar, the highs and lows of the next candle should be contained in the previous candle. Now, if you look at these two candles here, this red candle is not containing the green one, meaning it's not an inside bar. So most people would get trapped here. People would enter after this and the market takes out your stop losses. This is exactly what the market maker likes doing to you traders, because they know most books are writing in that as long as the candlestick body is within the previous one, that's an inside bar. No, the highs and lows of the candle must be inside the previous candle, right? So I hope you guys have seen that now. Now let's come to the next one. The candle buyers tried to come in, right? But they failed and sellers still pushed the market down, right? One, you've seen your first market condition, the loss of momentum. The market reduced the speed, showing that sellers are losing their energy to push the market down. So the next thing you want to see is one of the other candles, the three types of candles that we did, right? So this is not an inside bar, so you don't take action there. And the next one is what becomes an inside bar. Are you seeing this? Because all the highs and lows of this green candle here were inside this red one here. This red one here, this is the red candle I'm talking about, this one here, right? So This made it an inside bar. Now, some people take the trade here, but those who would like to take trades with momentum would wait for the buyers to show that their presence is there, and then they would take the trade, right? So this is how you'd have treated this area here. One, you had loss of momentum, and then two, you had an inside bar, or what people would call haramis, right? So are you seeing how we're using them in a combined way? You do not use it alone, right? If you had just used loss of momentum here, most of you, your stop loss would have been taken out, which is not what we want, right? Now let's go to the next part. Now the trade went up, of course, met a level of resistance areas here. And what happened, I didn't mark this area here, so let's talk about this down on. When the market came down, but of course, you can also see how the market approached here. Loss of momentum, bigger candle, smaller candle. Then what happened? Loss of momentum, and then we had an engulfing, of course, with the structure. We have M's and all that. We know the rules that happened. So, but today, of course, we're talking about candles. Let's not go about structures and all that. We had loss of momentum here, bigger candle, smaller candle. And what happened? Sellers came into the market, right? Different color of candle came into the market. On my chart, red represents sellers, but it doesn't matter. You can put in a color of your choice. Then after loss of momentum, I'm looking for the other types of candlesticks to come in, right? Of course, the buyers were rejected with this candle to show you that sellers are there, but that's not enough. What will show me that, yes, now I can start thinking of a sell is when the market gave us a bearish engulfing. And the third most important is when the market even gave you a structure, right? Now, let's continue pushing down. Now, when the market kept pushing down, I just want you guys to see here, bigger candle, right? Then smaller candle into your area of interest. What is making this your area of interest? We had a turning point here that pushed the market up. So when it comes back here, it becomes your area of interest. And what is happening in that area of interest? Loss of momentum, bigger candle, smaller candle. And what happened next? The market engulfed that previous candle. So others would like to take their trades after just this, but others would like to first see a momentum of buyers, and then they wait for a slight retracement before they can take your trade, right? So the market pushed up, and again came to this area of interest. Now, this is an area of interest previously here. I've already marked it. Now, I just want you guys to see how, again, the market approached this area. The market was creating bigger candles. Of course, along the way here, lost momentum a bit, but as you can see, there's a loss of momentum slightly, but no indication that sellers are coming to the market. What happened? Buyers gained momentum again. Then they started losing it. Are you seeing? Bigger candle, then smaller candle. And what happened next? Sellers came into the market while engulfing. And how many candles were engulfed? 1, 2, 3. This is an indication that now buyers have lost it, right? And sellers are showing their strength in the market. And what happened? You can clearly see the market was pushed back all the way down. Now, some people would get trapped here again. Just look at this situation here. The market didn't approach this area of interest with any loss of momentum. Are you seeing a big sell candle approaching this area? It is slightly was rejected, right? An inside bar came in, but check the momentum of buyers was not there. Why? Because we didn't have the market losing momentum while approaching this area here. There was no loss of momentum. You can clearly see mixed reactions, yes, but no loss of momentum. Are we together? The market kept going down. Now, where did the market try to lose momentum from? Let's push a bit. The market now started losing momentum from here. When it came back up, then check big candle, small candle, which is rejecting. I think we talked about rejecting candles or multiple rejections in an area. So we can clearly see that the market gave you a loss of momentum. That is one, loss of momentum, right? Then two, we need now to see the other types of candles, rejecting candles. We had rejecting candles. Then what next? We saw an inside bar. So you could have taken a trade here, and also we had an engulfing. So you take it after this or after this. Of course, recall we're in a bigger time frame. We don't take trades in bigger time frames. You have to go to your intraday time frames, that's hourly or minute time frames, to look out for the rules of taking trades, which we shall discuss in future videos. So if you've not subscribed, make sure you subscribe and hit that notification bell so that you don't miss out all the contents that we're going to be bringing out here, right? So the market again moved up, right? Again,
check how the market approached this area here. Of course, did not reach the exact level, but you can see that there was a loss of momentum. So I'm not going to talk about this. There are reasons as to why this market did not reach here. We shall discuss them in other future videos. Of course, we had an impulse. So there's a level that was supposed to be tested and was tested here, right? So this is how we use the different types of candles. One, you're supposed to mark your area of interest. After marking your area of interest, and then you look out for one, loss of momentum, and then two, you need to look out for the other candles that are backing it up to show you that now either buyers or sellers have come into the market. Let's also look at this area here. Let's see how the market approached this area. Big candle, lost momentum, then sellers try to show you, but this is not an inside bar, right? Why? Because this candle was overpowering this, but sellers try to show that, hey, we are viable. Now, what do I need next? Since I have already a loss of momentum here, what do I need? I need one of the next candles. And you can clearly see the market was rejected from this area that I've marked, this key area. After rejection, what do I want? I need another candle to show me that sellers have come into the market. How was that shown to me? A big sell candle coming in. This shows momentum. And of course, if you know structure properly, an M was given to you, we needed just a retest, and then boom, you can see the market went down. Are we together? So if you've been using candlesticks just the way that I've explained to you in several textbooks, when you see an engulfing, you're supposed to be taking this and all that. Try practicing this and you'll see how your trading is going to change, right? So that is it for today's video. We shall keep explaining more and more about this. And if I've been a bit fast for you, you can just slow down the video or you can rewind it so that you understand this point. Because most people who claim they're using price action are actually being beaten when it comes to the communications of these candlesticks. It tends to confuse them or tends to lead them into traps, which I would like you guys to avoid as long as you're following this channel. I would like you guys to avoid those ways that most of the 95% are going through, right? So if you found value in this video, do not forget to smash that thumbs up button. And if you've just come across the channel, do not forget to subscribe and turn on the notification bell so that you do not miss out any content of value just like this one.